Let's also welcome on board Pawan Parakh. He joins in from Renaissance Investment Managers to talk about what he's making of the market right now. Pawan, hi, good afternoon. Good to have you on the show. Just wanted to get in your sense on what the market internals are looking like right now. Does it seem like we're close to peaking out? What is it that the investors should be doing?
So I think markets are now factoring in a full-blown recovery, not only in India, but if you see globally also last 3 months, has actually started gradually coming down. And while the inflation is coming down, most of the growth indicators continue to remain very decent. In that backdrop, market is actually now pricing in a full-blown recovery, and that is the reason, and typically these kind of markets, you would see mid-cap and small-cap stocks doing very well. And I think that is similar. That is exactly the kind of market we are into. In this kind of a backdrop, I would actually recommend investors to be very selective, right? But at the same time, remain participate in the market. I think there is no sense in staying away from the market. It makes a lot of sense to remain invested, but at the same time, it's very important to remain very selective because there are few pockets in the markets which are showing signs of overvaluation. But at the same time, there are a lot of sectors and stocks which haven't seen growth over the last 10, 15 years, but are now seeing growth. And those stocks and sectors are available at reasonably good valuations. So it's time to be selective.
And let's probe a little bit more into that. What sectors are looking overvalued and undervalued to you?
So I think the entire staple base continues to remain overvalued. I think chemical sector, there are few pockets of overvaluation given the downturn in which the sector is. I think these are the two sectors where I see some sort of an overvaluation. In fact, I would go ahead and say that even some tech stocks, despite the correction, there are some pockets of overvaluation even there as well. These are broadly the key sectors where I see overvaluation. But if you see on the other hand, banking sector, industrials, they have been one of the leading sectors who actually rallied in the last 1 or 2 years. And there also I see, I think if you look at the top large banks, ICICI Bank, HDFC Bank, by no means, I don't think you can consider them to be overvalued. I think they are fairly valued. Similar is the case if industrials also take the case of large companies like Cummins or L&T. I think these are companies considering the growth that they have in front of them. I think they're reasonably valued.
Point taken, but Naresh, what about the entire mid-cap zone? Because that's, outperforming massively today. Do you think that's getting into a bit of a stretched and overbought zone as well?
So yes, we are getting into overbought zone for the Nifty, the small cap index as well as the mid cap index. But the only way you can ride big trends is to continue to hold on to stocks till the time they continue to make higher tops and higher bottoms, or they start making the first indications. We've not seen reversal signals. The only case when we start looking at being a little more cautious is when the Nifty starts making lower tops and still the small cap and the mid cap indices continue. But as of now, we've not even broken 19,500 on the Nifty. Once we start doing that, that's the time you take some chips off the table. The only thing which one can do right now is play a lot more defensive, focus on low beta names. And that is where we are seeing the ball move. We are seeing NTPC at a new all-time high. Oil and gas is doing well. So time to be more defensive and continue to hold on to positions and be strict on the trailing stop losses going forward.
Just looking at the chart of ICICI Bank, if we can just bring out the intraday graph for you, because, like while Kunal was just mentioning that just last week, it did manage to clock that all-time high of 1,006 rupees per share, thereabouts. And it did scale that all-time pack of the 4-digit mark. Now, the 7-day chart, the intraday graph, if we can pick up, because there is a big spike coming in on ICICI Bank, holding upwards of almost 0.4% right now as we speak, and climbing up even faster than I speak right now, almost in a rush to hit that 1,000 mark once again. Kunal, intriguing move on ICICI Bank. What do you read here?
Yeah, I think it's been a bit of an impending move, I would say, for ICICI Bank. The stock had disappointed earlier. In the June series specifically, when I think clearly Axis Bank was one of the better performers, Indices Bank had performed well, HDFC Bank had its fair share of gains. But I think in the July series, you've seen ICICI Bank actually taking the lead so far. And I think at the start of the August series, it could probably be a good sign that the stock is coming back to its strong uptrend, even though it's recovering from the intraday lows. But then the fact that the stock is hanging around the 1,000 odd mark, closer to those levels, I think is always a good sign. because it indicates that the stock was trying to saturate as well as go into a maturity of a trend closer to a strong change of round digit. I would ideally believe that ICICI Bank should be good for 1060 to 1080 over the near term. So my view on private sector banking stocks have been to bet on very specific names, not the entire pack as such, because not all stocks are moving in a synchronized manner. ICICI Bank is one of the stock which is looking strong. 1060 to 1080 is what I would place a short-term target for.
Okay, that's ICICI Bank climbing up very smartly in trade right now. Power, of course, like Nuresh was highlighting, is a big trend also right now in trade. In fact, Pawan, that's the other thing that I wanted to talk about, this entire sectoral churn which is actually taking place in the market. Anything from the energy power space that is looking interesting to you?
Yeah, I think utilities as space look pretty interesting because I think as a country, we've not invested much in renewables or much in power for last 4 or 5 years, honestly. While we've seen economic growth, considering the growth in manufacturing that we're going to see ahead, we need to invest in power now. So, and most importantly, typically in energy and energy related sectors, you'll find most of the companies from the PSU space there, be it utilities, be it financiers. They are largely from the PSU space, which was largely ignored by the markets for last 5-10 years. So considering, NTPCs of the like or RECs of the like, these companies are trading at very, very, very cheap valuations. So I think that sector looks pretty interesting.
Okay, so that's a view coming in on some of the power stocks. But the other space which is building on to gains today is, of course, the real estate pack. In fact, for the week, that's tracking a gain of 5%. If we can pull up the Nifty Realty Index, for the week, it's higher by around 5%. Sobha is higher by 12%. Prestige, the bulk of the move has actually happened today. And then Godrej Properties and Lodha as well have managed to eke out gains of around 5 to 10%. Pawan, your view on the real estate pack and which is the top bet?
So I must tell you, our channel checks in top 5-10 cities, they clearly indicates that the demand is back with a bang. Any good property closer to position, there's hardly any inventory left. So very clearly, it's a very, very, very sectoral, big secular tailwind that the sector is seeing. But we are trying to play this sector more through building materials because, we are not comfortable with a lot of the names on the real estate space, on the developer side. And secondly, we don't really understand how to value these companies because, the PNL doesn't reflect the true reality. So we are actually playing this sector via building materials and through some of the home financiers.
Right, okay, that's the take coming in on the realty pack. Right now, it's banks which are on their way to recovery. ITC is holding out very smartly, a good 1% move coming in here. What is it that you made of the entire demerger news?
So I think, this was very much on the cards, but the kind of the kind of demerger Street was expecting, I think the actual print has been a bit different. But very clearly, I think the management has shown a clear intent that they want to create value for investors. And very clearly, I think that's been the stated stance for last 2 years that they will demerge the company once they think that those demerged company can stand on its own. So I would not be surprised that we'll see 1 or 2 more companies getting demerged out of this ITC conglomerate in the next 1 or 2 years. And in that kind of a scenario, I would continue to believe that, ITs as a stock should do well. It is relatively, despite all the outperformance it has seen in last 1.5 years, it is still by far one of the cheapest FMCG companies and obviously a large cap name. So it looks pretty interesting to us, honestly.
Since we are talking about consumption, let's look at some of the QSR names as well. Westlife, of course, yesterday was seeing a bit of a sell-off on account of that 7% SSSG, but the management is confident about bringing back growth, and that's the reason today that stock is holding up around 4%. In fact, a lot of interest around some of these QSR names when it comes to dealing rooms as well, and there has been some fresh buying that we have witnessed. Let's go across to Sharat to try and understand which is that stock from the QSR space that the dealing rooms are talking about.
Well, yes, in focus we are having Restaurant Brands Asia, and what we are hearing from the dealers is a strong buying coming in from the DI segment. Now the DIs have already invested in the company earlier. As per the shareholding pattern, includes the name of Nippon India Mutual Fund as well as Aditya Birla Sun Life Mutual Fund. The stock is trading above its key daily moving average of 50, 100, 200 DMA and is up almost 34% from the March lows. But there are, of course, some signals coming in from the street. They're expecting there is an increase in the urban discretionary expenditure, and that will actually drive up the sales as what we had seen in the Q1 numbers for the Westlife development. And for FY24, the management expects that the same store sales growth is expected to come in at roughly 10%, while the gross margins, they're expected to come in at almost 67%. Now, apart from this, the Popeyes business is also getting a strong response coming in the volume numbers. That is expected to go up going ahead. And also the Indonesia business, they are expected to get their break even on the cash levels in FY24. And of course, in a recent interview with ET Now, Ace investor Porinju Veliath also stated that this stock would be his top pick for the next 5 years.
Okay, Sharad, we'll leave it at that. In fact, let's get in some BTST trades as well before we wind up for the day. Kunal, what's on your list?
So, two buy calls. The first one is on IRCTC. After quite some time, the stock has made a very mild comeback, but this could be a sign of a strong turnaround for IRCTC. Buy with a target of 660, stop loss at 610. And the second would be a buy on Union Bank from the PSU banking lot, now trading just closer to that 1991 mark. Again, a breakout on a minor time frame for Union Bank, which is a buy with a target of 3-digit 100 and stop loss at 87.
Right, Naresh, what about your top strategies, BTST?
So first would be a buy on Apollo Hospitals with a revised stop loss at 5,300 and a target price of 5,450. Second would be a buy on UBL, United Breweries Limited, a range breakout here. And the stock has seen good volumes over the last 1 month as well. Stop loss at 1540, target price of 1620.
That's a take coming in. Let's take stock of what's happening in terms of the specific movers. And today, of course, Intellect Design, after our interaction with the management, has picked up more gains. So it's now locked in upper circuit, 20% higher, had already opened with quite a bit of momentum. And then Godfrey Phillips, I think it's the second day running that stock has been high for around 10%. Naresh, your take on the charts of these two names, that despite the run up, would you look at buying any of these names or book profits?
So would be riding onto both the names rather than booking profits because the move has been almost very large and volumes have been too large. It's a 5x, 10x volume bump up. So one can ride on, keep a trailing stop loss. But after a 20-30% move in 2 sessions, it's tough to take a buy with a small stop loss. So the viewers trail onto the position and maybe book over the next 2 to 4 sessions.
Okay, that's the take coming in on some of the interesting buzzers in trade right now. Tata Chemicals, that's the one which just shot up a good 7%. There's Indiabulls Housing as well, a good 6.5% move coming in there. Tata Power, again a move in excess of 6%. Z is holding up over 4%. LIC Housing Finance as well is seeing quite the buzz in trade right now. Naresh, just on the charts of Indiabulls Housing actually.
So the stock generally remains in the derivative band, so that's where it becomes a problem. Sees volumes on the first day of the expiry, but the volumes in the last 3 days have been good. So out here it could surprise on the upside. Any fade off towards 130 due to the derivative band should be an entry price. Stop loss below 125 could go towards 160 to 180 also.
Separately, Pawan, what's your take regarding some of these pharma companies? They've reported stellar set of numbers. Do you think it's ripe for a re-rating after Cipla, Dr. Reddy's, Syngene, etc.?
Again, in pharma, you need to be very, very, very selective because, I mean, take the case in point of Cipla and Reddy's. A substantial part of their US sales was boosted by Revlimid, one single molecule that could continue for a couple of more quarters. But that may not be the case for the long run. So for the long run, you'll have to look at the product profile of individual companies. We think, some of the leading companies in this in the pharma space, without naming them, some of them are doing some wonderful job in terms of specialty generics, in terms of building very strong franchise on the injectable side. That is where, we place our bets. But largely, we are still, I think, underweight on pharma sector. And until there is very high clarity on the pricing scenario on the US side, we wouldn't want to take an overweight position on the sector.
Okay, great to have you all on board with us today. We let you go on that note. See you again with Trading Action Monday morning.